Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is April 22nd, 2019. Tonight we're going to be looking at the 10-year notes. The ETF in this case is IEF. Now we got the trends to the upside, short, intermediate, and long term, so that's been underway for a little while here. The technical rating is still positive, but we got a tight support resistance level, and that's what I'm going to be talking a little bit about tonight, just because of the fact that there's some uneasiness going on with this particular market, and it really is summed up by this tight resistance support level. As far as other alerts that popped up here on the 10-year notes, on a weekly bar basis, when we hit the peak 4 weeks ago, we actually had a profit-taking alert that has taken place. Nothing's popped up yet with any of the other alerts, but we did in the 5-year notes have a stretch high that's occurring this week. So we'll see if anything else pops up here, and something you probably want to monitor when it comes to the 10-year notes. So we talked about the strong, tight support resistance levels. So here's the 10-year notes. Today's close here at 127, call it and a half. You can see at 127 and a half basically that we've got some major resistance to the market with a strength of 120 and a count of 4, and just below the market again 127.4, so basically 127 and a half ish. We have 125 and a count by 4. So what this is telling us is that we've got resistance to the plus side, we got support to the lower side, and we got gaps either way. We got resistance gap through here with nothing really holding it going up to 127.90, call it 128 if you will, and then we've got to the lower 127 level, virtually nothing holding it up here either. So something's going to give here, and it's really just a matter of just trying to figure out which way it's going to break. So I'll point out this. If we pull up the market here, here's daily bars for the 10-year notes. You can see it's kind of tracking its 50-day moving average here. Here's some resistance levels that it could come into play. Down in our energy level, and I just did a workshop on this. If you want to pull up the blog from last week, there was a blog that I did, half-hour blog, so a long one, where we were talking about basically the energy level and consolidation periods. Now, the consolidation period, for it to be official, this green line would have to be below this yellow line, but you can see that it's basically been moving sideways, so it's closer to a consolidation than it is to an expansion phase that we see up through here. You can see that the market has been moving sideways, so technically we're not in a consolidation, but it's as close to one without being called one. And so that, along with the support resistance that we're seeing. Now, on the daily bar basis, you don't really see too much here other than the resistance we have up here. But behind the scenes here, I have a weekly chart. And this is where I think that there's a stronger formation for this support resistance. So this level right through here, if we come straight across, you can see these bars right here. These are weekly bars for 10-year notes, that they're basically touching this lower point right there. If we go up, going back in time to the 17, coming all the way across, you can see that the highs to this were being prevented from moving higher. So we're between, granted it's a weekly bar, and granted that's a pretty wide margin, but we're basically in a consolidation. And when we factor in daily and intraday support resistance levels, that's where we're coming up with that strong, tight support resistance, what I call an energy zone, that something big is going to happen. So on the weekly bars, it looks like it's spent and looks like it wants to sort of turn over here. We've got some other alerts that are popping up here that are suggesting that. On a daily bar basis, there's really not too much happening other than the fact that we're basically in a little bit of a consolidation. So that's why we then revert to what the systems are doing. And the systems, I only have one system that's long. It's got a nice open position profit, a little over almost 18 grand with all of the trades that are going on. But with the one system that remains, it in itself is up 18 grand. So it's been in a trade for a while. 30-year bonds, we have at least an open position profit of 2,600 with two systems on the long side. So the systems are looking for a continuation of this trend, as you might expect. If we look at the watch list, here's 10-year notes and 5-year notes, again, at the higher end here where they're more bullish than they would be bearish. But the weekly charts are telling us that something is going to be happening here, and so this is more of a foreshadowing of what could be happening here. So just simply watch this market very carefully. Obviously, there's talk about rate cuts. Are we going to have a rate cut, with the pressure from Trump, or is it going to remain the same? There's a lot of ambiguity that's actually taking place here. We're in midsummer, the summer doldrums. I don't know. I don't really speculate as to when they're going to increase or decrease rates, from the Fed's perspective. All I know is that I've got a glaring tight support resistance level, and that's telling me that something big is going to happen. I pointed out that there's very little that's really preventing the support gap and the resistance gap. Can't really say from all of this analysis which way the market's going to go. And again, that is why we will watch the systems, see what they say. They always have the call, and they always have the last word. So with that, let's see what does take place with the markets. We got some nice open position profits, so we can give back some if necessary, or we can be more than willing to take on a little more profit if it allows for the market to head a little bit higher. So watch this market very carefully, and we will look at another market soon. Bye-bye.